Real estate investing for beginners. Real estate investing can be intimidating to those not familiar with the industry. It can take several months before investors become fully comfortable in real estate investing. That's why beginner-friendly investing strategies are a good starting point. While they are suitable to investors with little to no experience, they can still be highly profitable when managed correctly. Starting out in a beginner-friendly investing niche is a great way to learn the ropes before taking on more complex investments. By starting with an accessible strategy, investors can get to know their local market, build a network, and learn how to raise capital without committing to a deal they may not be able to handle. Investors can then use their experience and profits to transition into other strategies down the line. Here are some real estate investment strategies for beginners to use as a starting point. 1. Real Estate Investment Trust, REIT. Real Estate Investment Trust invest in various real estate assets, from data centers and apartments to office buildings and single-family homes. Many REITs are traded on popular stock exchanges just like stocks, making them an accessible and highly liquid way to invest in real estate. REITs are required to pay out 90% of their profits to investors in the form of dividends, which means they're a great source of reliable income. Before move on to the next step, if you found value on this video, please like and subscribe to this channel. 2. Flipping properties. The difference between rehabbing for a rental versus a flip is that flipping entails rehabbing and then selling, instead of rehabbing and holding. You still want to do just enough renovations to sell the place for the maximum amount, and no more, so that you make as much of a profit as possible. On its surface, flipping may seem like more of a get-rich-quick scheme than a real estate investing strategy. But there are much easier ways to make money than flipping houses. That's because everything has to be executed just right, since the longer you hold the property, the greater the risk of losing money. Successful investors have a whole house flipping process in place that the property can seamlessly fit into. This would include everything from being able to purchase materials at an affordable rate, a crew who can provide high-quality work at a fair price, and a real estate agent who specializes in flipping. If done right, flipping should only take a few months. Flipping houses is not a passive investment. 3. Invest in rental properties. So long as you have good tenants, you should enjoy stable passive income. For this reason, screening to ensure successful residents for your rental property is an essential skill in the real estate industry. It goes part and parcel with performing gestures to show tenant appreciation and knowing how to write a great rental listing. This way, you can start with tenants who are more likely to stick around and can make them feel adequately valued, so they're more likely to stay in your investment property year after year. To ensure that your real estate business remains a passive investment opportunity, you can use a property management company. For 6 to 12% of the collected rental income, a property management company will handle everything, from tenant screening and security deposits to maintenance between tenants and even evictions. When conducting your due diligence, make sure to get a breakdown of every fee the property management company may charge, as well as all the costs associated with your property. Knowing which amenities to offer tenants and how to correctly price rent relative to the market is also essential. Too few amenities and rent that's too high, and you'll end up with vacancies. If you like this channel, please subscribe and write your thoughts on comment section. Thank you for watching.